The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes, and we want to make sure that we give you the most up-to-date information so that you don't overpay your taxes, get the largest refund, lowest balance due. That's what we're all about. I am the Tax Lady, and I'm joined in studio with Christopher Fabian. Hello, Christopher.
Hello, Esther.
Okay, so this time of the year is when the investment stuff starts coming out.
Yes.
And people really are confused about that, don't you think?
Oh, yes. Well,
Because they can't read they don't know what the brokerage statement means.
You didn't need that. You don't need this. And
Right. So, well, first of all, when you get that big fat packet of investment material for your investments, not your IRAs, not your 401ks, because until you withdraw from your 401k or your IRA, which will be reported on a 1099 R form, you don't have to worry about those except to watch to make sure that they're doing a good job with your investments. What you really need to watch out for is the year-end tax statement that's provided, and it usually has a lot of pages if there were any transactions that would have been for buying and selling of stocks. So you just don't look at page one and think that that's the answer, because it isn't necessarily.
no, especially if you have if you sold stock and it's coded in E, you got to double check to make sure that basis is correct and all those pages underneath, because that could be blank. And if you just go by that cover page, you could be costing yourself money.
Right. Absolutely. So if you have a stock that has that you got X amount of dollars, but there's no cost basis in there, that means you're going to pay the taxes on it. So you want to make sure that you do research in your own records to find out what you really pay for that stock to reduce the gain. Right?
Yes.
All right, I'm Esther Gulius, the Tax Lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And if I sound nasally, I am. I got such a cold. Anyway, let's go to the phones and we're going to talk to Ray. Hey, Mr. Ray, how can we help you, sir?
Yes, hi, thank you. So this past October of 23, my brother and I sold our mom's house. She passed away, and it was a life transfer. So my understanding that the cost basis equals the market value. What form do we use to report the sale?
Schedule D.
Schedule D, you said?
D. Schedule D.
So here's the...
Because it's the sale of a capital asset. That's why you use the Schedule D. Okay. Unless it was rental property. Did Mom have rental property?
No, ma'am. It was just her own personal house.
Okay.
So now the buyer's attorney sends us a 1099 form.
S, right.
Right. And it was gross proceeds.
Right.
The gross proceeds were almost $40,000 more than the net proceeds. How and where do I reflect that on our tax return?
Well, your proceeds are your proceeds, but you have to record the sale price as the sale on the Schedule D, and then you have to do your cost basis, which would be the fair market value at the date of death of Mom, and then you can add in all the closing costs.
Right.
Which would be part of why you got less than the gross.
Right. So that's going to that's going to increase what would be a deductible loss.
Okay, so the key is Schedule D, right?
That's the key.
All right. Well, thank you for saving me a big headache. I really appreciate it.
All right. Thanks, Ray. Have a great day.
You too.
I'm Esther Gulius, the Tax Lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And let's go to Mike. Hello, Mike.
How you doing, Esther? I know you've
I'm-
addressed this before, but my daughter-in-law was asking, and I want to make sure I get it right. She is selling a house in Florida, condominium. She's lived there 3 years, buying another one. Didn't you say if you live 2 years in a house, something about gains or
The first
how does that?
is she single or married?
She's divorced from my
Okay,
son.
so that means the
second time.
first the first $250,000 of gain is tax free if she lived in it 2 out of the last 5 years.
Okay, federal. Well, there is no state tax in Florida, so.
Right.
Okay, so that's it then. So I can
She'll be
tell her
good.
that. And that's,
She's going to be good.
Thank you.
All right, Mike. Thank you, sir.
Okay.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. Text us at 716-8030930. What do we got, Chris?
Right. And, today is March 9th, which means in 6 days is S corporations and partnership deadline day. So if you own an S corp or a partnership and you don't have all your stuff ready, you have to file an extension by the 15th of March, because if you don't, then your return will be late and you're looking at $200 a month penalty per shareholder,
Which is a lot of
which
lot
can
of
be
dough.
a lot of bread.
And the other thing is, we haven't mentioned this in a while, but if you're a limited partnership, a limited liability company, a partnership, or an 1120S, you have only 90 days to register with FinCEN, BOI FinCEN. And if you don't register within 90 days, they will charge you $500 a day till it gets to $10,000 for failure to register. Now, if you had an existing corporation prior to 2024, then you have the full year to register. But it's nothing to snub your nose about. It's a definite penalty for failure to file.
Yeah,
And go take a look. When I'm talking to my clients about this stuff, I'll pull up the website, and it says Financial Crimes Network. It looks really scary.
Yeah, I love how people always that's New York State for you. And it isn't,
It isn't
this
New York
state.
State, it's
This
the
is
federal
the
government.
federal government
Yep.
that's requiring you to do this. So
All right. So looking, going back to what happens this time of year when you're getting your financial statements, there are things on there that go on different parts of your return. So capital gains go to the Schedule D. The foreign taxes paid goes to Form 1116. Now, you don't have to put those things on your tax return. You can leave them off, but if you leave them off, you're overpaying.
Right. Yeah, I mean, the foreign tax credit, I mean, it's only $10. Who cares? Well, that's $10 in your pocket.
That's right.
So
Right. I mean, I had one today that was $600. That's
Yeah.
a lot. And they had a lot of 199A distributions as well, and that qualifies for the 20% QBI deduction.
Right.
So, and again, that's all on the form. But the important thing is make sure you got your ducks in a row. I had a client the other day that I prepared about a month ago. You got everything? Yes. She just sent me a statement the other day. It just came in. So if you do get another statement, what do you do with that form, statement?
Then you have to do an amended return. And that's the thing. But, people who have E-Trade. E-Trade was bought out by Charles Schwab. So you're going to get a statement from E-Trade for the first part of the year, and then Charles Schwab for the second part. So just because you got your E-Trade and you think, I got everything. Nope, you need your Charles Schwab
Right.
too, because there will be dividends.
And so then if you filed your return already and you got a new statement, you have to do a 1040X and an IT201X if the figures are different than what you had on your original return, because failure to do that could cause you to get audited.
Right.
Okay, I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break. We'll be back with Debbie, Gordon, Mark, and you on the other side.
We are family.
Hey, family, this is the Tax Lady, and we want to help you with your taxes. So give us a jingle, 8030930, 8030930, star 930 on a cell phone, and we're going to go back to the calls. We're going to talk to Debbie. Hi, Deb.
Hi, how you doing?
Good.
Okay, my question is about my mom. She's 85, and she went to the bank to get her RMD, required minimum distribution, and she went in December. They did not cut the check till the first week of 2024. Is my mom liable? They gave her a 5329. Is my mom liable for a penalty?
Well, there is. She would probably have to do a 5329.
Which she said she's got.
Yeah. Well, no, she got. Yeah. But then you got to do page 2
Right.
at the bottom and explain that
What happened?
What happened, and you can get the penalty waived.
Yeah. They generally will waive the penalty.
Okay, so I would put an explanation on the tax
That's right.
return for
At
her?
the bottom of the 5329, page 2, is where you fill out the request to have it waived because you went to the bank and they didn't cut the check.
Okay. Okay, thank you.
Very welcome. Thanks for calling. I'm Esther Golias, the Tax Lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, 716-8030930 if you want to text us. All right, we're going to go to Gordon. Hey, Gord. Hello?
He's listening to the radio, not
Yeah,
us.
I can't hear Gordon.
Gordon.
All right,
Okay.
we're going to go to Mark. Hey, Mark.
Hi. All
Hi.
right. I got questions on 1099R. I have two different ones. They're both distributions from an inherited annuity. But one looks like it might be from, it says in box 4, distribution from an IRA.
Okay.
And the other one just has the code 4D, but it doesn't have the IRA box checked.
Right.
So where am I reporting those on both the federal and then also on the state, with
Well, the
line
one
9?
that's an IRA goes on the IRA line, and the one that's not an IRA goes on the pension line.
Okay. And then where does on
And you just
IT201
carry it, and you just carry it forward to New York State.
Right. And then is one of them excluded, New York
Well,
subtraction?
the first $20,000 that you have in IRAs or pensions, unless they're government or New York State pensions or county pensions, because those are completely tax-free, is going to be tax-free on the state, and so that would be a subtraction. How much? Do you have any other pensions besides those two?
Well, these are inherited from my mother-in-law who passed away a couple of years ago, and these are like yearly
Do
distributions.
you have any other pensions other than those two?
I personally have a pension from the New York State Teachers Retirement. It's about $2,500 a year.
Okay, so the New York State Teachers Retirement is 100% excludable. The other two are total under $20,000, don't they?
Yeah, one is $2,500. The other one's about $700.
All right, so you're going to back those off on your New York State return under
On the
subtraction.
regular pension line, not the government pension
Right.
line.
I'm looking at the IT201. That's line 29 under New York subtractions.
It could be, don't have the form
we
in
don't have
front.
the forms in front
There's
of
one
us.
line that says government or local pensions, and then there's another one that says pensions
Yeah.
or annuity, IRAs. So you would use the pension and IRA one.
Right, and then finally though, but do I have to include it first though on line 9 of? Again, you don't have
Yes.
a form,
Yes,
but line 9
it's completely the state mirrors the federal. So the federal income is going to be transferred to the state income, and then the subtraction is because you're taking it out of that mirror image from the federal.
I gotcha. Okay.
All right.
And then one final.
Thanks for calling.
Wait, he's good.
Yep. Thank you.
Yeah. Oh, hey, Gordon, you're back. Hello, Gordon. Hello? Oh,
Nope.
well, I guess Gordon is not back. All right, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930 star 930 on a cell phone. Some other things I
Wait,
want.
I just want to feed off
Yeah.
of my,
Yeah.
because that is a big thing. People, you do inherit IRAs, annuities, 401ks from loved ones. But you do get the subtraction, but you have to remember that subtraction is in 20,000. You have to look at how many people received that money, and you have to divide the 20,000 by that figure.
The maximum deduction. Right.
Yes. So,
So if there were 5 heirs, then
each
you
would only get a $4,000
Right.
subtraction.
And so then if you had a $9,000 distribution, you'd only be able to exclude the first 4.
Right. And so the other 5 you would pay tax on.
Right. Correct. Okay, I'm Esther Gullius, the tax lady from EG Tax, 8030930. 8030930 star 930 on a cell phone. All right, I want some things that you should watch out for is the American Opportunity Tax Credits and the New York State Education Credits, because it's such a hard thing for people to know who should get the credits, the student or the parent.
Right. It's whoever claims the child. So if the parents claim the child, the parents get the credit. If the child claims themselves, then the child gets it.
But who's best suited for it most of the time?
The parent.
Because the first $15,000 a kid earns anyway is tax-free. And most of the kids that are working are making less than that are in college. So the American Opportunity Tax Credit and the state pension, the state credit for education are 2 big credits, and you should watch out for that. The other thing is, if you are a health professional and you worked in a hospital or health environment, you might have a bonus that's listed under box 14 that says HW bonus or HW 1,000 or HW 3,000, and that's a subtraction on New York State.
Right. And speaking of box 14 and New York State,
414H.
414H is an add back to New York. And I think it was Amherst this year that has NYSRS, New York State Retirement System.
Rather than the 414H.
Than the 414H. Well, that is the 414H, and that's an add back as also. And if you forget that, New York State won't, because in 3 years, they're going to send you a bill and add a whole bunch of interest and penalties to that.
Right,
So,
and it's like they enjoy that, don't you
yes,
think?
extra money.
I'm going to tell you. Okay, and just like we were talking with our friend here, the first $20,000 in income from non-New York governmental pensions are up to $20,000 are a subtraction on the New York State return if you are over the age of 59 and a half.
Correct.
Right? Let's see. Subtraction. Oh, the other thing is, let's say you've cashed in bonds. The other day I had a couple that cashed in a whole bunch of savings bonds. They had like $100,000 in interest. What do we need to be careful with there?
Well, that is taxable on the federal, but tax-free on the
New York
state. So if you're a do-it-yourselfer and you don't tell the computer that, you'll probably end up paying tax to New York on money you shouldn't.
Absolutely.
And they won't tell you did it wrong.
They certainly won't. Okay, and then 1099 forms. 1099s that you get through the mail are reported based upon the origination of the 1099 form. So if the 1099 was for rent, that would go on the Schedule E. If the 1099 is for self-employment, that goes on the Schedule D, Schedule
C.
If the 1099 is for the sale of stock, it goes on a Schedule D. So each 1099, based upon the origination of the transaction, goes on a different part of the tax return, and you have to make sure that you do that correctly too.
Correct.
Okay, let's go to Peter. Hey, Pete, how can we help you?
Hi, I just have a quick question. How many years of my tax return should I keep?
Well, the statute is 3 years, but they can go back up to 7 years if they suspect fraud. So I would think, to be safe, you want to make sure that you don't toss them out before 7 years. And anytime you have something that would prove a basis of something that you're going to sell later, I wouldn't get rid of that either.
Okay, so my parents my mother died in 2013, so I can get rid of all of their paperwork?
Pretty much.
Because I'm just trying to,
I know
make
you want
everything as easy
to par
for
down.
the next
Right,
person
par
as
down.
I can.
Right. Okay?
Yes, thank you very much.
All right. Thanks, Pete. Nice. Thank you for the call. I'm Esther Golias, the tax lady from EG Tax, 8030930. 8030930, star 930 in a cell phone. Okay, they say Gordon is really back. All right. Gordon,
Hello.
you are there.
Yes, I am indeed. How are you?
Okay, I'm good. What
Good.
can we help you with?
Just a couple quick questions for you. I'm on Social Security, and I think I did not file a federal return in 2021. And when I was into your office recently, last tax season, they told me I couldn't file my federal because the government thinks there was some kind of fraud because I skipped a year. And so then they sent me a letter and told
You
me
mean
I
the
had
IRS? The IRS sent you a letter.
IRS sent me a letter and said I had to either do some razzmatazz on.
You had to prove your identity.
Exactly. So I don't like doing that stuff online. So I downloaded the form and mailed it in January this year to get that straightened out. I sent it to Fresno, California, and they're supposed to call me, but they haven't. And
Okay, so I have to break for the news, but I'd like to talk to you about this on the other side. Do you mind waiting till the other side of the news?
Not at all.
All right, because I will tell you, you can call the IRS.
Well, I was hoping you had a magic number.
Well, no, there usually is on those letters. But anyway, we're going to take a short break, and we'll be back on the other side of the news. Hey, everybody, this is Esther Golias, the tax lady from EG Tax, and we are trying to help Gordon here with this situation. Hey, Gordon, are you still there?
I am indeed.
All right, so let me tell you. They just started this verification of people, for people who have sent in a tax return last year.
Mm-hmm.
On the letter that you got, there should have been a phone number. And if you call that phone number, they then verify with you over the phone who you are, your identity.
Yeah.
Now, when I did it the other day with a client of mine, it transferred then over to another agent who then verified again, and then they made him an appointment to go downtown to Buffalo to the Internal Revenue Service where they would have a face-to-face meeting. That's probably the way it'll go since it's gone on so long.
Okay, well, it's curious. I'm certain that I've lost the letter that they sent me, so the phone number is out.
Oh.
So
Well, we can get it.
No. This is a separate.
I'm sorry. I did download the form that's required, and they said they were going to call me over the phone, verify everything, and send me some kind of magic number that would allow me to file again. I might have to file this year, and but as I said, I sent it in January to Fresno, and I haven't heard anything back from them yet, and I'm getting a little concerned about April coming up.
Yeah, well, it is tax season, so they're a little busy. But also on that original letter they sent you was a not like a password almost type thing, that a control number they're going to ask you for, and without it, they may not verify you.
All right. Well, as I said, I'm very reluctant to do anything on the internet, so I'll just have to search for that letter and see if I can find it. And if I can, then I'll call them up.
It also wouldn't hurt for you to just call into the Internal Revenue Service.
Okay.
And
well,
explain over the phone what happened. I mean, they may just transfer you to the magic place.
Okay, well, I'll give that a try. That's a very good
suggestion. It certainly isn't something that I would be afraid to do. I think that would be a good solution. Somebody would probably want to help.
Okay, well,
All right, thanks, Gord.
I'll explore that. Thank you very much
All
for your
right,
help.
thank you, sir. Bye-bye. I'm Esther Gilius, the tax lady from EG Tax. Yes, sir.
I was just going to say, he's not alone with that letter.
Oh,
Two and a half million people got those letters this year, and it seems they're all from Western New York.
Well, I will tell you this. It's so frustrating because you have to go through this whole thing and you feel like you're being violated.
Yeah.
But that's, I think they're trying to get a handle on
Fraud.
Okay, let's go back to Jimmy. Hi, Jim.
Hey, Esther, how you doing?
I'm good.
I'm a tax preparer too. I got a tax client. They got an NR4 from Canada for interest in a Canadian bank. Now I asked them some questions. They don't own, or the bank account isn't more than $10,000. Would I just put that on Schedule B and then check the foreign?
You're going to put it on Schedule B.
That's what
You're
it
going to
said,
do.
yes.
You're going to do the conversion. You want to convert it to U.S. dollars, and then you're going to put it on the Schedule B.
And you do check the box down below that they have an account over in a different country.
Okay.
I got one more for you. I had a client that they have a retirement account for their brother that passed away, and she is the primary, but his kids are the secondary. Now, believe it or not, she doesn't want the money because she has enough money, and she wants to. She was talking to a lawyer about it, and she wants to. I can't remember the official legal term, but she wants to just. She doesn't want it. She wants
to move the bequest from her to her relatives, right?
Right. Will she get a tax form for that if that's done?
It all depends on the nature of the income. So if the income is just bank interest, no, she won't get anything on that because it's not taxable.
It's another client. It's a retirement income. It's
Right.
like
So
okay.
Well, if as long as she doesn't get any money, she won't get a tax form.
Okay, that's what I told her. But I was
Now,
gonna
did it go
research
into the estate? I mean, who's got control of the money now?
The sister, she does. She is. She was power of attorney before he died because, he was in hospice and all that, and she's the executor as well.
But the question is, after he passed away and the pension or IRA or whatever it was distributed, was it distributed to the estate of, or did it go to her?
I'm not sure because he just died.
Oh, so this is a next. All right, so this hasn't even happened yet.
Well, yeah.
So she hasn't gotten the 1099-R at all.
No, because the money's still sitting in the fund.
Right.
Yep. She's just wondering about next year,
Right.
So yeah, she would just there's probably a form she has to fill out, and I'm just going to make up a name at Prudential saying she releases her beneficiary, and so then it would go to her kids.
The next of kin.
Yep, and then her kids have 10 years to take the money out.
Okay. Okay, very good.
Okay.
I appreciate all your help.
All right, thank you. I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone.
Don't forget, you can text in your questions.
Oh, yeah, you can
too.
text in questions. Right.
Yep.
Another thing that people need to be aware of is when they start talking about tax brackets. And there's more confusion about tax brackets than you can shake a stick at. So people think that when you move up into a tax bracket, that all of your money is taxed at that level. But that's not true. It's a graduated income tax. So the first level that you're taxed at if you have taxable income. Now, this is after you've taken your standard deduction or itemized deduction. If you have anything left, the first bracket is 10%. Then after that, if you have enough income, you move to 12%. But the only thing that's taxed at a higher bracket is the money in that next bracket. It's 2% higher.
Right. I had to answer 3 of those questions today alone. So
because
it is
people,
a very
I don't care
question.
how intelligent you are, people get really confused about tax brackets.
Yes.
Right?
Yes. Yep.
Okay, what do we got, Chris?
I took an RMD in January of 2024, but we are moving permanently to Florida later this year. Will I need to pay income taxes to New York State for 2024, although I will be a Florida resident at the end of the year?
Yes. Because it's when you got the money, where were you a resident?
So you'll have to do an IT-203, which is a part-year resident return. You still do get the $20,000 exclusion that we were talking about in the beginning of the show. So you still may end up paying no taxes to New York, but you do have to file that IT-203.
Right. Kind of thinking back about, we were talking about if somebody died and then they didn't have a beneficiary and it goes into their estate. I had a client the other day that her sister had passed away and she had left the estate $550,000. And so when I did the fiduciary return, the tax liability was around $260,000 with the state and federal. And she didn't think it had to be taxed at all, but she very proudly had a 1099-R form. And so that's why beneficiaries are very important, that you designate a beneficiary on your IRAs and pension plans so that upon your death, it goes to who you want and not your estate.
Right, because, first of all, the estate, the 1041, after $12,000 pays 37%.
Right.
So there's no way around that. But if she would have listed her sister as the beneficiary, and I'm going to say they were still within, because they're sisters, within 10 years of each other, she could annuitize that over the rest of her life. So she would have only had to take, we'll say, $10,000 out a year or $20,000 out a year, which her taxes on that could have been 12%.
Right.
So look at that
and
savings.
so it's very important. And then yesterday, I had a really great guy. His mom, when she was in the pink, she never thought she'd have to go into the nursing home, right?
Yeah.
And so she had maybe $700,000. And they didn't plan. They didn't plan at all. And so all of a sudden, her health took a turn for the worst. He never went to an elder care attorney, and for the last 2 years, he's been paying $140,000 to $170,000 a year. And he figures that now he went to an elder care planning attorney that he'll be lucky if he ends up with $200,000.
Yeah,
and that's I mean, none of us know when the shoe's going to drop. You might be in the greatest health ever, but a car hits you. Or you have a stroke. I had another client the other day who was 45 years old, and he had a seizure and died in the car with his kid. And, it's just, so the whole thing is you want to plan and you want to prepare because your heirs are left holding the bag.
Right. You just don't know. It's sad. But before our commercial break, a weird thing this year, I've had 2 people tell me they had bat problems. Bats.
Huh? Bats?
In their attic.
B-A-Ts?
B-A-T. Not bats in the belfries.
Wow.
Bats in the attic.
Wow.
And I have to say hi to the bat grandma. She listens every Saturday. But I mean, that's you talk about two people. I mean, how many other people? Must have been a bad year for bats where they were going in attics instead of the trees.
Nobody has ever told me about bats.
Well, now you're going to have a lot.
Well, but we are going to take a short break for a short break, and we'll be back on the other side.
We are family.
Hey, to us, you are family. And if you're sitting there struggling, like some of our phone callers, with what to do, I mean, doesn't that scare you, some of the questions that we get?
Yeah, and
I
then
mean, and when a tax person's calling on, yeah. But anyway, if you're sitting there struggling, you just struggle no longer. EG Tax is there to help you. We have 31 area offices to serve you, 9 to 9 Monday through Friday, 9 to 5 on Saturday, and don't forget, extension deadline for corporations and partnerships is coming right up. It's got to be done by the 15th.
Right. I was going to say, I know you were interviewed by the station we're on right now, WBEN, this week about the free IRS software.
Right.
And, you listen to these questions, you listen to our clients, and you just sit back and wonder, and why would people try to do taxes themselves?
Well, I mean, they'll get something.
Especially on software you don't know.
They're going to get something, but they don't know what it is, and they don't know if it's right. And on top of everything, it doesn't do the New York return. So, All right. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. You want to read the text?
Sure. Roth IRA 5-year withdrawal rule. I am 70 years of age. I'd like to convert $10K every year for 5 years. On the 6th year, can I draw all of the $50K plus dividends? So, yeah, as long as it's been 5 years from the initial contribution, yes, you can do that. So, be my guest. But I would look at to see how much taxes you're paying now compared to in 5 years.
But this is a Roth IRA.
Yeah.
So what's he going to pay taxes on?
Well, no. Well, for converting.
Oh, he wants to convert it to a Roth.
Yep.
That's like yesterday. I had a client that said, we went to see our financial planner, and he said that I should convert to a Roth. And I said, great. So let me show you how much you'll pay in taxes. So I plugged it in to her return, and she would have owed about $70,000. And she said, I have to pay taxes on that? Yes. When you're going from a traditional to a Roth, you pay taxes now. So when you hear these people talk about you don't have to pay taxes when you retire, no, you just pay them now. So, you got to really think about it.
Yeah.
Right?
Yeah. I mean, I had one yesterday too. I'm going to put $7,500 in. Okay. I said, well, you did that. And that cost, he goes, oh, no, it was through his work. He wanted to put more money in his Roth 401k. And I said, well, that just cost you all this money. He goes, why did my broker tell me it was a good idea?
Well, that's because they don't know taxes.
Yep.
They know what they think. If it's never taxed, it'll be so good. But let's face it, with the large standard deduction, many people won't pay taxes anyway. And I see little guys like that are doing running at Instacart, and they're putting money in a Roth IRA, and I think it would take a miracle for this person to ever have a taxable event in his life.
Yep.
Okay, let's go back to the phones. We'll go to Mike in Tonawanda. Hi, Mike.
Hi, Esther. I have a question from COVID time when they had everyone was getting unemployment. I was able to receive New York State unemployment. My question is, was there like some ceiling or something like that you were forgiven? And was that where you pay state tax but not federal tax, or vice versa? I don't understand that at all.
That was just for 2020, and it was the first $10,200 was tax-free on the federal, but fully taxable on the state.
Okay, but you still have to file and have all the information on that.
You haven't filed your 2020 return?
Well, I haven't filed anything on that unemployment because I never got a 1099 or anything on that.
All right. So haven't they sent you a bill?
Not yet.
Okay. Well, and you have filed.
Yes.
But you didn't include the unemployment.
Yeah, but I didn't put in the unemployment because I never got the 1099, and somebody said that I should have gotten
if they haven't written you, my assumption is that they think you have a refund coming. So I would file an amended return as soon as possible.
Oh, okay. and so I would have to go to unemployment and get them to send me.
Don't you
Their
have an
website.
online?
You have to go to their website.
Right.
Oh, okay. Thank you very much.
Very welcome. Thanks for calling. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And I got Camille. Camille. What a nice name.
Hi, Esther. I have a question. I'm going to probably be selling my house this year. When I purchased it, I bought it for around $70,000. Okay, I've been in the house 21 or 22 years. I'm getting my house appraised this week. How much taxes am I going to be paying on my house once I sell it?
Camille,
$1 million.
How long have you
$1
lived in
million
the house? 21 years, right? Never rented it, right?
No.
Okay, nothing.
As long as you can have a profit of up to $250,000
if you're single. $500 if you're married.
Well, it's not going to be a $250,000 profit. So
you have nothing to worry about.
But you're good to go.
Okay, thank you.
Thank you, dear.
Bye-bye.
That was mean for you to say that.
And we got a text.
All right.
My son gambles as his profession. Much is offshore. He does his own taxes.
I bet you he does.
And tells me he doesn't worry about offshore income. Is he correct, or is he just blowing smoke?
Well, I think the boy, I mean, they're doing BOI FinCEN. It's they're looking at fraud. They're going after people that are committing fraud. With electronics, everything is much easier for them to track. Your son has to pay taxes on all income, all worldwide income. Offshore is worldwide income.
Yep.
So,
yeah.
And I would hate to see him get in trouble.
I know. That's terrible.
It's just like anybody. Until you get in trouble, you don't really care many times. You just want it the way you want it. All right, a couple of things I wanted to talk about here again. Earned income credits. Don't forget, if you have a child living in your home and your income is under like $50,000 from wages and other forms of earned income, you might qualify for the earned income credit. You also would get the earned income credit if you're childless and your income from wages is relatively modest. Using an IRA to best benefit your situation. When I have clients in front of me, I say, now, how would you like to put money into an IRA? You got this bank account here. Why don't you move the money from this shelf to this shelf? And they save thousands of dollars. And so using the IRA to your best benefit is a really great tool.
Exactly. Yep.
And then people don't know what an IRA is. Why don't you explain what it is, Chris?
It is a individual retirement account. So it is a self-funded retirement account that you control yourself. Instead of your company, like a 401k, you have more options for investments and everything. You are limited to how much you can contribute a year.
And you have to have wages.
And you have to have wages
self-employment
to contribute. Yes.
Right.
Yes.
So, but it's an absolute great tool. And let's go quickly to Gary. Hi, Gary.
Esther.
Yeah.
You did my taxes.
I know who you are, Mr. Guitar Man.
Yes. I got my state back, and my federal didn't come. And when I called them, I did that number you gave me, and it said they said I don't know. It was very confusing. They said like my identity to prove my identity or something.
Okay. Did they send you a letter that said that they wanted you to fill in all those things to do your identity?
No, I didn't get one yet. I checked. I didn't get a letter yet.
You're probably you didn't get one last year, and you ignored it.
No, this is the first time I ever got one.
Okay. If you need help and you get the letter, come on in.
What's it for, though? The identity?
Because they're making sure that you're you. I know you're the Guitar Man.
Yeah.
But they-
I mean,
but
I
they
even
don't
showed
know.
my driver's license this year. I'm very confused about the whole thing.
Yeah, no. This is just like we said earlier. 2.5 million people got these letters last year, so it looks like they're starting it again.
Right.
So you're going to get this letter. You can either go online and verify yourself, or you can call the number.
I'll bring it in. I'll bring it in.
When you
can
get
help
it,
me.
Gary, bring it in. We'll help you.
Okay, thank you very much. Have a great
All
day,
right.
weekend.
Thank you. Bye-bye. This guy's got like tons of guitars. He loves guitars. He'll say, "Oh, that's a Led Zeppelin, whatever," you know. Anyway. All right, I'm Esther Golias, the tax lady from EG Tax. So we were talking about that. Another thing is, if you have a C Corp and it has modest income, it's making a net profit, but let's say the net profit is $40,000 or $50,000. You're paying 21% on that money, number one, and it's doubly taxed. Move for your C Corp to an S Corp so that it can be transferred over to your personal return, where your rate might be 12% versus 21%. And it's easy to do, and we can help you.
Yeah. 21%, then 15% for dividends.
Right.
So your tax rate's really 36%.
And when you take it out,
and don't forget about the state.
right.
So you're really costing yourself. You really got to look to see.
A lot of money. And a lot of times people just don't know what to do. You come see us, right?
Yep.
All right. Well, until next week, I'm Esther Golias, the tax lady from EG Tax. Go to our website at egtax.com. I hope by tomorrow I'm feeling better.
Amen.
Right. All right. And thanks for listening. Thanks for your phone calls. And if you need help, give us a jingle. Bye-bye.